All right. Hello, everyone. Thanks so much for joining us today. My name is Greg Lewis. I'm the marketing manager for MetaStock, and today is a live event starring the one and only Jake Bernstein and Brian Latta. And they'll be talking about the timing magic of expansion contraction, and that'll be starting here in just about 6 minutes. First, let's watch a video.
Hi, my name is Kelly Clement, and I am the president here at MetaStock. You know, one of the biggest questions I get asked is, what is MetaStock, and how can it help me in my trading? Well, if you give me about 3 minutes of your time, I can show you. MetaStock is an award-winning software and data package that has been helping traders for over 40 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock works across all asset classes, including stocks, futures, forex, options, crypto, and more. MetaStock is designed to help you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategies should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? What are the best options to trade? And of course, how do I know where prices will go next? At the core of MetaStock are its power tools. The power tools are designed to give professional-grade analysis tools to private traders. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting. This allows you to see how your strategy would have performed over time. One of MetaStock's most powerful tools is its charts. MetaStock allows you to navigate through your charts through browser-like tabs, arrange them in ways that you see fit, or group them in layout windows that allow you to quickly access your groups of charts. And then with the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, well, you're going to love OptionScope. OptionScope puts all the critical information at your fingertips, displaying sortable, customizable, color-coded options data, even including the Greeks. You can then take this data and analyze your options with the built-in strategies with risk-reward graphs. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you'll appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has systems based off of popular strategies, things like MACD, Bollinger Bands, turtle trading, candle patterns, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. As you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to create, build, and test their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package powered by LSEG, a world leader in market data. Zenith is a comprehensive and flexible system with an extremely powerful search tool, which includes fundamental and economic data. Add on our world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 35 consecutive years. To find out more about MetaStock and how it can help you in your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right. Thanks so much for watching that. Thanks again for joining us here. We'll have our main event starting in about 1 minute and 45 seconds. Again, my name is Greg Lewis. I'm coming at you from Southern Texas. Jeff Gibby will be hosting today from Salt Lake City, Utah. And Jake, I believe, is in somewhere around the Simi Valley in California. Just so you know what's going on, geographically speaking. And they appear to be set on that end. A couple quick things. Do go ahead to make sure to like and subscribe and click that bell so you'll be notified every time we have a live event like this. And we do have live events like this most every week, sometimes a couple times a week. Sometimes we have full day events and sometimes we have multi-day events. Speaking of multi-day events, I haven't yet managed to get this live yet, but we're having our conference coming up. I can't even remember the date. I can tell you this, in about a day, if you go to metastock.com and go to the banner at the top, you'll be able to see the information on the conference and you'll be able to register there. It's a lot of speakers. It's usually 40 to 50 speakers. It's a lot of great information, and you really don't want to miss that. All right. Again, we do ask that you all go ahead and, I'm sorry, let me see this. Yeah, I see there's a lot of you here. Go ahead and say hello, hello. Vincenzo, the super fan from Italy, thanks for joining us. And hello to everyone else. We do encourage your participation and questions and comments. We just ask that you be nice and respectful to the speakers and your fellow viewers. Okay, we got about 16 seconds, so I'm going to let you listen to some jazzy music while we get things started. Thanks again for joining us, and successful trading.
All right. Thank you, Greg. Appreciate that. Hey, everybody. My name is Jeff Gibby. I'm going to kick things off today. It's good to see you. I hope you're doing well. Hope you're doing well. It's good to see you. Thank you for coming. If you're watching us on YouTube, make sure to like and subscribe. It helps a great deal. Today, what I'm going to do is I'm going to read a legal disclaimer. I'm going to introduce some friends of mine that are very, very good guests that are going to talk quite a bit about kind of, expansion contraction and kind of the pretty unique indicator that does it. I call it the Swiss Army knife of indicators. So let's go ahead and get started with that. Let me see if I can hide this there. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risks inherent in trading. MetaStock and its employees shall have no liability for investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So, hello everybody. John, Siki, Vincenzo, it's good to see you. Thanks for saying hi in the chat. If you have any questions during the chat, we're going to be watching it. Make sure you kind of type them in, say hi. If you have any issues, let us know. We'll help you fix it to the best of our ability. Maybe I should add that. In any case, it's good to see you. Our guest today, Jake Bernstein. Jake's a really good friend of mine, and Brian Latta. Jake has like a really interesting story in terms of how he got started in trading. He saw I believe, you better correct me if I'm wrong, I guess, but he saw an advertisement back in, I think it was the 70s, on how eggs were going through the moon. It intrigued him. He ended up trading futures as a result of that. And we've known Jake for a number of years. He's prolific in the markets. He's done probably, I think it's over 44 books on trading. He's had a newsletter that's been publishing consistently since the 70s. But above all of that, super nice guy. We love him here at MetaStock. Always great to work with. Always super awesome. Brian is a trading coach. He's trained a lot of people on how to trade and how to look at the markets. And he's actually helped Jake design the JBXC, which is what we're going to talk about today and what is going to be part of the presentation today. So that's a big introduction. We absolutely love all of both Jake and Brian. I love the way the indicators look. It's been very, very popular. So let's go ahead and get everybody started. Jake and Brian, can you hear me?
You betcha.
All right.
Loud and clear.
All right, Brian. I know it's your screen. It's good that I can't talk now because I'm done. But I'm going to make you the presenter so we can see your screen. I'll make sure everything looks good before I kind of cut everybody loose. So I'll let you know as soon as we can see your screen, and we can see it now. So
Great.
with all that out of the way, I'm going to get out of the way for a few minutes. I'll be here if you need me. Thanks for joining us, guys.
Okay, so I'm going to take the lead here first, and thank you very much, Jeff, for inviting us and for inviting me back. We've done many things together over the years, aside from the fact that we used to live close to each other. It's been a pleasure to be associated with MetaStock and to be invited to so many functions and so many presentations. Truly a great piece of trading software for anyone who trades stocks, futures, etc. Fabulous. And of course, my friend and associate Brian Latta, who's going to do most of the presentation today, because as you see, I barely got my voice, not from talking too much, but from an injury that I got back in my childhood when I was 7 years old, having had polio, and that leaves a marked impression on you physically for many years to come. But aside from all that, it has not stopped me from trading. I made my first trade in the summer of 1967. That's 1967. I've been trading since then and still trade now. So the good news about trading is this: anybody can do it. The bad news about trading is that very few people can do it correctly. What Brian and I have put together, in this case with Expansion Contraction, primarily with Brian's insight, lead, and intelligence, is the Expansion Contraction indicator, which is presented so beautifully here on MetaStock, because it contains with it a specific expert commentary so that you always know what you're doing. And Brian, don't hesitate to jump in anytime you want. For me, having made literally tens and thousands of trades over the years, it's very clear that traders lose money much of the time, not because they have bad strategies or bad systems, but because, number one, their systems are not based on rules. Number two, when their systems are based on rules, they don't follow the rules. And number three, they like to trade based on interpretation and analysis rather than hard, cold facts. It never ceases to amaze me. You watch the evening TV or the TV during the daytime and you see a man, he's sitting at a desk, he's looking at a screen. It's obvious that on the screen is the chart of a stock. Numbers are jumping all over the screen, lines are moving all over the place. He's smiling at his screen. In the background, there are some children. They're literally tearing the house apart, throwing things around. But he's happy because he's trading. And you assume, because he's got a smile on his face, that he's making money. In all probability, he's not. Again, not because of the fact that there are no systems available that make money, but because of the fact that he's got to interpret what he's doing. And interpretation is akin to imagination. Imagination is great when you're writing novels, when you're doing a TV show, but imagination is not great when you're a trader. If you have to imagine anything, interpret anything, explain anything, look at multiple indicators at one time, analyze a trade, you're on the path to losing money. I can speak for Brian as well as myself. We are specific, rules-based traders, and what we present for you today, primarily by Brian, is Expansion Contraction, which is a brilliant indicator that I believe Brian designed with some of my work as the core of it. But the good news about Expansion Contraction is this: for me, it's red light, green light, or no light. So if it's a red light, it's a sell. If it's a green light, it's a buy. If it's no light, it's a nothing. It took me 15 years to learn the right way to trade. I had no teachers, I had no mentors, I had no experts, and most of the books that were available in the late 1960s, early 70s were books that taught you how to analyze the market. Analyzing the market is a tricky, slippery slope. You can look at some information, I can look at some information, and we can both analyze or interpret that information in two polar opposite ways. That does not work. If you're doing that, if you're still doing that, if you've been doing that for a long time and you're not making money, that's one of the biggest reasons why. So we're not here to lecture you on psychology of trading. And I'm in my view, even though I wrote my first book, The Investor's Quotient, for John Wiley & Sons, about the psychology of trading, the bottom line is, I don't believe there is a psychology of trading. There is a confidence of trading and a discipline of trading. Discipline comes from confidence. Confidence comes from knowing what you're doing. Knowing what you're doing comes from having rules. It's really simple. It's a beautiful cyclical phenomenon, a virtuous cycle. If you have something that works and you've researched it and you know it works and it's rules-based, you'll make trades because you have confidence. If you make trades because you have confidence, most of those trades will win. If they win, it'll give you more confidence, which will give you more discipline to do the next trade. As I said, a virtuous circle. So in using the expansion contraction in the brilliant way they have it here at MetaStock is a very simple case for me. Indeed, Brian will show you all the rules associated with the methodology, and you can choose any of the rules that you want as long as you apply them consistently. We don't make guarantees. We're educators here today, simply to show you what works and what doesn't. And again, I encourage you to try it, even if you try it with no. Can everybody hear me?
Yes, Jake.
Okay, internet just went down next door. There was a big explosion. So I don't know how long this is going to be good for, but we'll keep on talking as long as we are on battery operated right now. Did you hear that explosion there, by the way?
We heard a little bit of a breakout of the audio for a second, but then you were right back. So yeah.
It came back on, no problem.
Yeah.
So appreciate the opportunity to do this with MetaStock, but what they've created and what it does is, in terms of education, it lets you know exactly what you're doing and why you're doing it. And that completes the package. So Brian is going to explain. I'm going to jump in from time to time. I do need to leave a little bit early today, maybe 10 minutes before the session's over. But again, please take this seriously. Don't believe what I tell you or what Brian tells you just on face value. Look at it. Try it. You'll see that it works. We know it won't work all the time, obviously, but we do believe it works enough of the time. And in terms of generating profits and losses, as long as you're following the rules and you're generating profits that are sizable in terms of the losses, it's going to work for you. So Brian, take it away.
Thanks for that, Jake. Obviously, we will also put up the all-important disclaimer here briefly. Obviously, you've seen this a lot, and it is still what it is. And of course, for both Jake and I, excuse me?
Can I say one more thing?
Sure, go ahead, Jake.
During the time that I've been in this trading business, which I say again, 1967, 1968, and professionally since 1972, I've met many people in the business for whom I care not even a penny. I wouldn't give you a penny for them. They're generally despicable, disreputable people. Sorry to say that, but the few people that I've met, a very, very handful of people, Brian and Jeff, truly great people to do business with, and most of all, and most important to me, honest, straightforward people. So go ahead, Brian. Sorry about that.
No problem, Jake. Jump in anytime. Always value your comments on that. So as you can see on here, I am commenting on a huge amount of research that went behind the behavior of price action, which has become known now as expansion contraction. It has been back tested and forward traded with 100% objective rules. Obviously, how it's used for the individuals, that is beyond our control, so I can't make a guarantee. But to put it this way, I'm very data oriented. I love making advantage of the entire market history, even with AI as it is these days. If you have a large language model that's garbage in, you're going to get garbage out. At least with the stock market, the past is known. And because the past is known, we can exploit that. So Obviously, Jake's already gone through his introduction and what his background is, as you can read through this pretty quickly. Mine is a little bit different because I did just start in 2000, quite a bit later than Jake did, as I was a general contractor at the time, wanted to learn about trading. But I have drawn on some past experience in the job market. In Silicon Valley, worked in statistical process control, reliability assurance. And so that's helped me make everything a process. So I have got a few other items on there. You can read through that. This isn't really about either
mobile
Jake or I. It is about how you can use this. So over time, I've definitely run through some challenges in trading using standard indicators. So I'm going to pop up a few examples from Trade Navigator here initially, just because I can program in some buy or sell setup. So this is a single indicator at the bottom. If you're familiar with the type of indicator it is, it crosses over from the signal line to its moving average. This is actually just the default MACD. So I popped up some actual buy-sell setups on the crossovers, plotted them up in the chart with some vertical red or blue dashed dot lines, and some of the results is how much the stock went up, just as if we were using an indicator, excuse me, for buy or sell setups. We want to know, does it win more often? Are the winners bigger and the losers smaller? On that, some of the standard indicators will still have some challenges, as MACD here just this year from January has shown 14 trade examples here, up and down, some bigger, although that says minus 6.47. You can see the price just dropped that far since it was a sell trigger. It did have, and that was the largest gain out of this. The overall net here, this is just a little bit better than 50-50 win to loss, and a little bit better than 1-to-1 profit to losses. The average losses are a little bit smaller than the average gains, but again, that's not a stellar result as becoming a client of Jake's back. And
Wait, may I jump in with the comment?
Go ahead, Jake.
You know, when you look at a chart, you say, I would have bought here, I would have sold here, I would have bought here, I would have sold here, and so forth. Everything on that chart, which took 6 months, maybe 9 months to develop, you look at it in 1 or 2 seconds, and everything is quote unquote clear, when in fact it's really not, because living each trade from one to the next, you look at the chart, it contains no emotion, no reactions, no personal feelings, no money management issues, no interference from the news or the TV or the radio or other opinions, and you make a decision very quickly. But going through a situation like Brian has done over here is really where it's at, because that tells you more specifically what really happened. But again, it leaves the emotional element out of the whole situation. And we know from fact, not from expectation or analysis, we know from fact that the weakest link in the chain is the interpretation of the trader. So putting the buy and sell signals on here like Brian has done, of course, looking at it with 20/20 hindsight, it's good, it's bad, it's whatever. But the bottom line is what's happening at the moment, and is everything crystal clear? That's all I have to say right now.
Oh, great, thanks for that, Jake. And of course, if you were taking 14 trades over the last 6 months with maybe 2% risk per trade, you would have taken a net of 28% risk on the 14 trades here and just been marginally up. Again, this is just an example to show what some of the problems have been with default type indicators. So I plopped up another chart here that is showing stochastic, and it is, of course, got its overbought, oversold. It's got its crossovers also on there. So what I did was go ahead and program in buy and sell setups on the crossovers and labeled out every trade here. This is actually 41 trades in the last 6 months, and small wins and losses basically throughout the whole thing. You can see late here in July, did find the top just within a day or two. However, the buy setup triggered to go long well prior to the low in price. So just taking a look at certain indicators on their crossovers, they either create too many trades or results that are a bit erratic. So I didn't add up every winner or loser here, but 41 trades, 2% risk, you'd have taken 84% risk throughout this and been marginally positive on the results. So the third indicator I've just popped up once again. Go ahead.
Right. Can you go back one chart? Yes, leave that one there. Let me say something else, and then I'll shut my mouth. So look, many times things are bass backwards, to coin an expression. A lot of people believe that if the stochastic goes down below 25 or 20, then comes back up above it, you buy when it goes back up above. But if you do some research, what you're going to find is that when stochastic gets overbought, as it did just a few, right over, go a little bit to the left, Brian, to the one you just had before, right over there. When the stochastic jumps up above 75, which is another cutoff point, it becomes overbought. But many times, if you buy when it's overbought, you will get the last part of the move up, which is usually the most predictable part of the move up. If you go down to the place where stochastic crossed below 20 in April, notice what happened to price. When stochastic crossed below 20, price began to plunge at the same time. So go back a little bit, Brian, right over there. So what happens is you get the cream of the crop of the tail end of the move, which is the most predictable. Now I promise I'll shut up.
Not a problem. Your injections there are always welcome, as there are more than one ways to trade these indicators, and I just picked one to do crossovers. Obviously, too many crossovers has created too many trades, taking too much risk. And I know personally, and from others that I've coached, typically unacceptable drawdowns come when you take too much risk per trade and or too many trades with risk. And I initially thought we wanted to trade frequently, and ultimately have come back and realized less frequent trading will give you less exposure over time. And if you can still, as Jake's minimums are, say 60% win to loss, and ideally average more than you put at risk, you have a positive outcome system that you can rely on. So RSI at the bottom here, again, I just popped up another trade result with buy or sell type setups. And again, this was just crossing above or below 50 on that. And go ahead, Jake. Oh, I guess you don't have a comment. So however, again, plenty of trades, just marginally up. Does have some positive results and a bigger gain here on that, but this is 24 trades over that period of time, and you can see we'll get consecutive losers. All strategies will get consecutive losers and drawdowns, ideally fewer consecutive losers, smaller average losses are better, but literally these indicator type setups have some problems of often over trading and taking too much risk. So I have popped up, obviously, what we consider one of the solutions for traders, 100% objective, clearly defined, written rules of when to get in, where to get out at a loss, when to take profit. And of course, I popped up with the analysis of the expansion contraction indicator and the expert advisor here that they've done, and I'll just show you literally in here when to get in, whether or not it's a strong buy, and all of the definitions of this. So basically what you're seeing on the program here is we have a buy setup. It's labeled with a B. I have popped the expert advisor back to the beginning of November. You can see November 3rd in the top right. So that shows that it was a strong buy and did create a longer term move that eventually would have stopped out and reversed on a sell trigger that filled. So we have 5 trades here rather than 14 to 24 to 41 in the same period of different indicator type setups. And so this is giving you, again, clear entry and exit triggers. that will give you bigger winners and smaller losers and fewer trades are some of the benefits. And basically just wrapping it all up, and the expert advisor again here to help you identify the clear conditions. I like to call it reality at the right edge of the chart on this particular program, because again, it's been back tested and forward traded to show to meet positive outcome objectives. So I do want to go through a brief description here. I'm assuming you can read this much faster than I'm going to explain it. But as it says, most indicators lag because they need many bars to plot one bar of data value. An expansion contraction is different because it measures data on every bar to just plot one bar of data, and therefore it is concurrent with data or non-lagging in that instance. And that helps us. Ideally, we're using leading indicators such as divergence or seasonals, or concurrent or non-lagging indicators that are just telling us what's true now. It's also different from most indicators because it does have a second measurement of price behavior, and that's identified as a trend filter. Those two measurements together will give us longer term trends. Average duration on daily charts, typically 24 to 30 periods, and shorter term swings on that, which will help us identify whether the market is in a trending pattern or in some kind of correction. We're going to show the charts briefly on here, but I wanted to post these detailed explanations. As Jake mentioned, red light, green light, basically coded this in so that it plots on the bars or candles if you're using that. When we're strong up, you'll see dark green bars. When we're weak up in some kind of correction, you'll see light green bars. When we're in a weak downtrend, you'll see light red bars, and in a strong downtrend, dark red bars on that. And that gives you a visual confirmation. Price behavior right now, it just is what it is until it changes, and that helps keep you very accurate on that. Second half of this is that I also went in and did some long-term analysis. That's why it's using over 500 bars of data to calculate the normal range. That is using standard deviation formulas, but to keep it simple, that just identifies normal pricing inside the normal range or strong pricing outside of the normal range, and potentially even when we might be technically overbought or oversold. Terminology I really don't like to use, but that is common in the market, where we may be well beyond normal price action and could potentially revert to the mean. So ultimately, that's basically telling you that you'll know what the current conditions are right now. Are we in a strong uptrend? Is it weakening? Or have we reversed on that? And as I said, this has been back tested between 5 to 20 years to show basically that win more often, make more than you lose on average results. And again, the idea there is to be trading in some of the high volume stocks that are in strong trending sectors. Ideally, we don't want to trade absolutely everything. You don't have enough capital to take that much, that's many trades with that much risk without giving yourself a potential for an unacceptable drawdown. Sudden market reversals up today, strong reversal tomorrow, or consecutive losers we can't do anything about. So ideally, your indicator or system adapts quickly. So I do want to run in real quick and pop up some chart examples using the MetaStock charts to show basically with this green rising line over time, it equates to the cloud or the cone in the background that has green shading. It shows the buy setup from when we've gone short-term, long-term bullish, and over time, what that trend is. So we'll have long-term trends that are rising or falling in this case, and shorter term swings or pricing where the red line, the short-term component of expansion contraction, is above the green line. However, the cloud or cone is green. You're going to see lighter green bars on here, and that's just a correction in an uptrend, trend continuation, trend correction, trend continuation up again, trend correction, on and on and on. until we finally get over to where we see a correction that turns into a reversal, and the cloud cone goes red, long-term, short-term bearish. There is a S sell set up in there, and price did drop until we started to see a bullish correction in here where the short-term position started to rise, but
Yeah,
then turned.
Brian,
Go ahead.
thank you. I appreciate that. So for me, there are just a few trades here. The first trade on the left lower part of the chart, where the red cone turned green. For 2 consecutive bars, which are green, that's my first buy. If I put in a stop, a specific defined stop, on this trade, you would not be stopped out. There is no change in the major trend until all the way to the right, where the cone changes from green back to red. Along the way, because we know that traders are human, they don't follow rules, no matter how well those rules are stated. The channel gives you opportunities to buy at the bottom of the channel. The bottom of the channel, the red line, is support. It gives you a specific buy number if you're in an uptrend every day, or if you're in a downtrend, it gives you a sell number. For me, it's that simple. If I want to make it a little more complicated, I will use the 2 inner lines of the cone, the red line and the green line in the cone, that will identify short-term changes in trend. But for my trading, being an old guy, knowing that I know what I know for many years of trading, that the big money is made in the big move, what could be easier than put in the buy trigger, enter the position at the first signal, reach your first profit target, second profit target, third profit target, trail the stop, and just let it go until the trend changes. It couldn't be easier. And the best news for me is this works in all time frames. In terms of stability, the most stable time frame that I've discovered for any methodology that I've used, and believe me, I've traded and tested thousands of methodologies, the most stable time frame is the weekly. The weekly is resistant to small changes in trend. The good news is it catches the big moves. The bad news is most people don't have the patience to sit with a trade and allow it to accumulate what I call the Warren Buffett move, which is the big move. But certainly that's entirely up to you. But I want to emphasize that for me, it's red light, green light. The rules are clear. I know what to do. And it's a godsend because of the fact that at my age, you want to capture as much time as possible to do what you want to do and let the market go on its own stead, on its own course, provided you have specific indicators like expansion contraction, which will get you those big moves if you have the discipline to do it. And that's a big if. And back to you, Brian.
Thanks, Jake, on that one. Also, as Jake was mentioning, of course, if you get the big move long term, that's fantastic. The idea here on the short term corrections back towards support at Jake's moving average channel. The buy on a dip. So if you did get in and you did hit some profit targets and you've gotten to break even and you have a subsequent buy set up, you can add to the winning trade. On that, ideally, you have no risk in adding to the winning trade, and that will give additional setup. So a second buy, a fourth buy, I should say, second, third, fourth, fifth, those are add-on trades or continuation trades. Buy on the dip should be fairly clear because we'll stay in an uptrend. The cone or cloud in the background will stay green, and price will drop suddenly here below the normal range of price, but it's still showing us we're in buy conditions long term until that trend reverses. So it will help with breakouts and buy on the dip or sell on the rip type trades. The next chart here, I am just making a comment on range expansion, where the cloud or the cone in the background is generally getting larger, and you'll see that as it widens and separates, the trend is up on this particular case. So also made a note here where price is consolidating sideways. The cone or the cloud will be contracting in this case. So contraction is some type of sideways to corrective pattern, and expanding is a trend continuation type pattern. In those instances, resistance is this case up at a price extreme and the cone of the cloud starts to contract, that helps us identify individual points of resistance. Or far over here in April, we do see price drop quite a bit lower, and again, show some type of support when the lines on the cloud start to contract. So will help us identify support or resistance, which we will just call temporary setup conditions. Once again, I'm a bit opposed to support suggesting price cannot go lower. It certainly can, as long as they're sellers, and even oversold is a poor label. Market's going as low as sellers take it until they give up. So again, want to minimize the overemphasis on overbought, oversold, support resistance, but we do want to know what it is with a definition. I've also marked, go ahead, Jake.
Comment, Brian. Sorry to interrupt you. Great presentation. So let me say something here. Looking at the specificity of the rules, it begs the question. The question being, why not put this on the computer, put all the rules in the computer, program it, and let the computer trade for you? Obviously, that's a question that's going to be asked nowadays, and it's going to be asked more and more frequently as artificial intelligence, as opposed to actual intelligence, as artificial intelligence becomes so popular, it's in everything now, where everyone claims to have it. So if you've got AI, you've got a good computer and a fast computer and a fast line, just set the program loose and let it trade itself and make money for you while you sleep. Guess what? It's not that simple. It's not that simple for a number of reasons. Number one, computers can be hacked. Mistakes can be made. An incorrect price execution or an incorrect price can show up on your screen. Your system reacts to it. Then the computer comes back and fixes the error. All of that can be programmed. Yes, it can be, no doubt about it. But we know for a fact that even a mechanical system that's completely computerized in the hands of a poor trader will make that system fail. So ultimately, it comes down to the weakest link in the chain. So if you want to put this on the computer and have it auto-traded for you, no problem. But make sure you understand it first and make sure you've taken care of all the possibilities that the system can go sideways for a while and screw you up with a bad price or a bad tick or a bad number and lose you a bunch of money that you didn't figure you'd lose before. And I'll bow out and let you have it back.
Oh, no problem on that, Jake. Well, plus servers can go down, your internet can have a problem, you can have all kinds of backup systems as you want. However, there's still what I would say the need for human intervention. If it's going to be auto-traded, it should be manually managed by a human and not just set it and forget it in that particular case. So I did label out divergences. In this case, price continued higher. We did make a new high in price. The cone of the cloud and expansion contraction long-term did not make a new high. Looking back within the last 60 days on Jake's divergence rules, anytime in the last 60 days that we've been seeing the market contracting with momentum, basically, and expanding with price making new highs, we have a divergence on that. And so even with the cone of the cloud in the background, or the red or the green lines short term, we can identify divergence, which would be a leading indication on a concurrent or non-lagging indicator. And of course, divergence is one of the best setups to find reversals in trends, and should be traded in your overall systems. So again, I popped up a bear market, price made new lows. The indicator is not making new highs in this case. Expansion contraction is a little different on the bear side, but we're contracting with expansion contraction. However, the trend is expanding to new lows. So that identified a bullish trigger that actually triggered a little bit before a buy setup and failed, of course, to be stopped out several days later. Of course, on all of these such situations here, if you've missed a setup, you're waiting for the next trade to trigger in those instances. But again, divergence, one of the best indicators, leading indicators to identify trend reversals. In the interest of time, I did just pop back up because recently we had done some previous recordings and showed the JBXC buys or continuation buys in this case. And I wanted to plot back up some of these charts as we did from last beginning of November, daily chart trade here on the Qs. And I'm going to go through the results pretty quickly because this was recorded previously on Take the Next Trade. Fourth trade was a swing trade at support and was a loss, so not all trades will be a winner. In this case, I want to go through this pretty quickly because I said it has been shown before on Take the Next Trade. On these, as you can see, we got fairly far into there, and since then, this was the right edge of the previous chart. I wanted to label out what happened since then. So sell trigger on here would have hit a profit target and a price extreme, which will show the rules on here briefly. Did trigger a buy and an additional gain, and a trend continuation set up additional gain, a small buy at support, gain, sell at resistance, and eventually again another buy at support, sell at resistance trades on here. Turned down, did give us a sell setup in the bear market that occurred in July. And that actually created a gain. And I just saw the data here. It should be 1.04% gain. I obviously copied the last one in order, didn't quite edit that. That is a 1.04% gain. And as of right now, I believe we're just down a point or so, 1.28 points, $1.28 on the last buy setup here in the queue. So in order to show the past and then what's happened since then, we just wanted to continue ahead and show those results. Go ahead, Jake.
I appreciate it. Sorry to be so interrupting. I'm going to have to be leaving shortly for another meeting, but I want to say something before I leave. A lot of people will tell you the best thing you can do as a new trader, or even as an experienced trader who's not making money, is to paper trade. I want to talk just a moment about so-called paper trading, which means trading without real money. Trading without real money, in my opinion, is very much like living with someone before you get married to them. Whatever happens in that experience will not reflect what happens in the real experience, which is once you're married. Because it's only once you're committed to a strategy that you make decisions that are not completely intelligent, that are based on emotional situations. So trading with paper, not real money, will teach you the basics, but it won't teach you or give you experience that you need with emotion. So I say to people, if you don't believe us about expansion, contraction, or anything else that we teach, or anything else that we use, fine. Don't paper trade it and assume that because you did well with paper trading, or that you did poorly with paper trading, then it's not for you. The system is not for you. What you want to do is experience it. That does not mean you've got to open a $200,000 account for futures or $1 million account for stocks. It means get in the game. Trade 1 share, 5 shares, a micro contract, a mini contract. Just get some skin in the game, because that skin in the game is going to determine how you respond viscerally, emotionally. And once you've participated in the game with 1 contract, 1 unit, whatever, 1 option, 5 options, whatever you can afford, that won't impact you financially or psychologically, then you can ramp it up and trade with a bigger stake in the market. But this paper trading stuff, I don't buy it. I don't like it. Maybe for a few days or a few trades to learn the basics, but after that, get some skin in the game, because only then will you really experience what it's like with real money, even if it's a small amount. So I will turn it back over to you, Brian, the capable hands of Brian and Jeff, and then I will see you guys next time. I appreciate the opportunity to be here. If you have questions, Brian will give our email addresses at the end, and Brian, I'll turn it back to you.
Thanks for that, Jake. So I did pop up a weekly chart, as Jake mentioned a little bit earlier. The most stable, potentially long-term trades may occur on a weekly chart. So labeled out a buy on here. The small green triangle is showing the expert advisor on January 20th, 2023. NVIDIA triggered a weekly buy setup, and then since then has not given any sell triggers, even in the correction that dropped down, making us buyers on the dip through that whole period of time. So this is quite stable. It did have additional buy triggers in the consolidation period. However, long term, as Jake mentioned, we can see some very stable long-term moves. And again, the individual's behavior that I've seen through coaching, when you take too much risk on a trade, you're not likely to follow the rules. I'm going to also say I'm to blame for that quite some time ago without clear rules or with taking too much risk. We have a tendency to break the rules and do something different due to behavior and risk. On the next screen real quickly, I just wanted to pop up as I do as an option trading specialist in stocks and retail currencies, wanted to plot the back testing results, or at least if you were running this forward, January 20th, 2023 was the start date on that trigger. Buying 70 delta, selling 30 delta, called debit spreads, risk $610, and was up $7,885 percent to the current day, because I ran that just to the 27th, which was 2 days ago, to put this up. Average percent wins here, 63% winning rate, which at a minimum is a 60% win rate. Ideally, comments Jake said before, and the average win at 1,400, average loss at 859 gave us 1.6+% profit to loss on a 60% win to loss, and those metrics are growth. So really quickly, looking at the time here, I did want to pop up the rules. I know you'll be able to see these more than once, because I do want to go through these pretty quick to give Jeff an opportunity to run through on the closing here. But I did pop up strong buy setups, weak buy setups, where we have weak buying pressure on the candle or bar, and Williams accumulation is not agreeing. It says we're in a bear trend with a buy setup. We use slightly different rules to get in, and this has come from back testing. It's what's better, but where to get in, where to get out at a loss. The actual code T1 profit target is the same as the stop loss. Go to break even. T2 and stocks to suggest 3-to-1, as trending stocks have a tendency better than 30+% of the time to hit a 3-to-1 profit to loss, or a price extreme on here. I do want to make sure if price exceeds what's considered to be a normal range, that we take some profit. So whatever happens first, a price extreme or the first target, get in, get up, get to break even, and let the trade play out. With options, I don't use trailing stops at all. If we are in any kind of a buy and Williams accumulation turns bearish 2 in a row, one of Jake's rules, we would exit the trade at a small gain or a loss. So if something changes, we've got rules for that. Do suggest to add to winning trades once you're at break even with the swing trades. Or continuation trades, as those will give you multiple positions all at once. The sell setups here are going to be just the opposite of the buy setups. Again, I'm going to leave them up briefly, but these will be available for you to look at and copy, paste, or write down, or take a screenshot on. Jake's swing trade setups, buy at support in a defined uptrend. I wanted to make sure you had the rules for that. Rules to get in, rules to get out at a loss, rules for taking profit. Our systems on here. Jake's swing sell setup on that. I'm also going to post my buy swing setups coming back to the 20 period simple moving average. And again, all the rules, when to get in, where to get out at a gain or a loss that are adaptive. And finally, the swing sell setup on that with, again, all the rules that you can copy, paste, and utilize on all of the test results. Those are the rules that were used that you saw on the example. So really the benefits here, clearly defined, rules to get in, rules to get out at a loss, rules for taking profit on here, and even when to add to a winning trade or a position. And these have been back tested over time and shown to be consistently positive outcome. So that kind of wraps up where we are right now. I think Jeff would like a few minutes to talk about the expert advisor and the power console and some of the system tests here, as MetaStock is fantastic for helping you prove in advance some of the power of expansion contraction. So Jeff, back to you.
Yeah. Do you mind if we just answer a few questions?
Sure.
Okay, cool. I wanted to read this. Senki earlier in the YouTube chat said, Jake really changed my trading life. It's been hell before I knew him. I'm forever grateful. So that's really cool. He went on later to ask if there is any nuance to filtering out sideways trades or some of the whipsaw trades.
Well, based on the rules, you're going to have lost trades, and those are typically on sudden market reversals or choppy sideways market where we might get consecutive losers. So I don't know of any system that's 100% win. And so we will have losses on those cases.
Yeah. Okay, cool. Let's see. Tom kind of talks a little about here. This is pretty cool. In my countless years of experience with trade educators, I learned that most of them are selling the newest can't miss indicator. Jake and Brian are refreshing and heartening exception who's are characterized by expertise, integrity, and a commitment to trader success. So love to see those kind of comments, don't you?
Oh, definitely, right? Well, the data doesn't lie. And if you have clear rules, they can't be fudged. And so back tested and then forward traded are what I have been considered to at least been the potential reality. However, of course, what each person does with it depends on the individual and their behavior.
Dan wants to know if he can get a copy of the rules. It would, if you want to, you could send them to me and I can kind of just give my email address out and send them to anybody that wants them. That'd be an easy way to do it. Is it okay if they get a copy of the rules so that they can kind of look at them later, like maybe a copy of the PowerPoint?
For free. We're giving this out for free in multiple other platforms. If you have TradeStation, Trade Navigator, Thinkorswim, NinjaTrader, obviously MetaStock, and even MetaTrader 5. I've got this coded and on expansioncontraction.com for free. So Jake and I aren't looking to capitalize on this. We're looking to help everybody make use of this, and I'm willing to give some one-on-one help if people have questions. So yeah, we're willing to do the rules and give them out. And also on that, just make sure you learn how to take quick screenshots because that's pretty handy. If you're seeing a presentation and you want to take a screenshot of what you see, that's free and can happen pretty quick. But yes, Jeff will give you those rules and you can hand them out to everybody.
Okay, very cool. Yeah. Hold on. Okay, I think that catches us up with that. If here, let me put my email address here in the chat. It's just jeffrey.gibby@metastock.com. Greg, on YouTube, can you put it on the YouTube side so that people can have it? Senki says, thank you for the awesome presentation.
Okay, I'll put up the phone numbers to get a hold of Jake and or myself. That is my personal cell number. Admittedly, if you call it, you're probably going to have to leave a message because I am fairly booked with coaching. Trade first in the mornings, coach second. Creates a pretty nice lifestyle on that. But we're willing to give back at this point rather than take.
Awesome. Okay, very cool. I'm going to take over now. Thank you, Brian. Also, I'll send Jake a thanks too. I always love having both of you guys on. Always appreciate your time. I know you guys are all busy. So, cool. Thank you. All right, let me go ahead and do this. Let me make me the organizer here. And I'll go ahead and show my screen. And we'll just talk a little bit about kind of how to find systems and how to find the setups and all that kind of stuff. It's easy. Brian already did a really good job of showing the commentaries and kind of how those all work and that kind of stuff. Let me show you how easy it is to find a quick scan using JBXC and kind of putting that together and all that kind of stuff. So what I'm going to do is I'm going to jump open here, jump into the Power Console, and I'm going to go to what we call our Explorer, which is a scanner. The scanner is going to scan the markets. It's also going to filter out anything that we're looking for and kind of give us a list of those things that we're looking for. So what I'm going to do here is I'm going to go to JBXC, and here you've got the kind of things that you can look for. You've got bearish divergence, you've got bullish divergence. We can look for buy signals, long-term bullish and bearish trend. If you one of the guys I was talking to just the other day said, how do we find, I want to be able to combine this with my own buy signals. How can I just find the stocks that have a long-term bullish trend? And there's an actual scan for that. You can actually just run the scan and it'll list all the stocks that are in that long-term bullish trend. You've got the sell signals and the short-term things as well. Let's just say we want to go in and kind of take a look at the buy signals that exist on the market. I'm going to go ahead and select this one right here, the JBXE buy signals. And what I'm going to do, actually, looks like I have a couple selected. I'm going to go ahead and kind of move the order on this just a little bit. And just for the purpose of showing this, I do want to say that if you run in this exploration, it doesn't matter where you're at. Like if you're here in the US, you want to use US markets, that's great. But we get our data from the old, well, LSEG group, the London Stock Exchange group, and they have all the infrastructure that Reuters built to kind of distribute data to hedge funds and institutions. And so if you're watching this and you're an Indian customer and you've been trading in India, well, thanks for using MetaStock, but you can get the data. My point is you can kind of trade it on your markets. If you're in Australia, if you're in UK, the data that we provide comes from over 200-300 different exchanges. There's literally like 330,000 different market stocks, not markets, but stocks you can trade. You can look at it with futures. You can look at it. It doesn't matter. We get data from one of the best sources in the world. I'm biased, but I think it is the best source in the world. But it is the same data that you use if you're a hedge fund or an institutional trader. It's basically a very, very similar data set to what you'd get if you had Bloomberg. So for the purpose of this demo, I'm going to kind of do a bit of a quick scan just so it runs quick. If you're here in the US and you want to do ETFs, there's a whole list you could do. You can scan all the ETFs. You can scan all of the optionable stocks if you want. Scan whatever markets that you want. For a quick show of how kind of easy this is to do, I'm going to do the Dow Jones Industrials, the NASDAQ 100, and the S&P 100. I'm going to have it run the JBX buy signal, so we're just going to find everything that has a buy signal. And we're going to do daily bars, so we're going to look for any markets that have that buy signal today. Let's go ahead and run it, okay? After it's run, it's going to run another exploration, but we won't worry about that. We'll just kind of look at the reports for the ones that we've got. I just happen to have two selected, which you can do in MetaStock. So right now we're going through, in those lists, there's about 520 scans, and it's literally ejecting about 90% of the stocks. So the idea here is one that I really, really like. I don't want to look at necessarily 520 stocks every day. What I want is a list of the ones that have an opportunity. And I think of all the platforms I've seen, MetaStock does such a good job of being able to hand this to you as a report that you can look at. And here it is. So if, let's go ahead and kind of make this full screen. You can see it run in the other scan right now. We're not even going to kind of worry about that too much. But what if I want to look at all the stocks that have the strong buy signal, you can go ahead and sort this based on this. And instead of 520, you would be looking at Able Marie, Principal Finance, Hewlett, Hun, Oracle. These are all stocks that have kind of that new buy signal. If we wanted to find stocks that had the continuation, that would be the rest of them, all of these ones with one. From here, we can kind of go in, we can kind of take a look at them, see which ones we like based on our trading style, see where they trade in relation to support and resistance, all that kind of stuff. So it does a really, really good job. And they did such a really good job. Actually, before I kind of go on with that, let's just open up Able Marie because I really like the way this is designed with the template. So I'm going to go ahead and open up the Able Marie stock. It's the first one on our list, and we'll just kind of talk a little bit about kind of how you can look at the dashboard view. So if we're looking at Able Marie, you can see very clearly when it went kind of into that short position or the short mode. And now we're kind of just barely getting a buy signal because it's going into maybe a longish mode. One of the things that I really like, I'm going to go ahead and just turn on the expert commentary real quick. Brian showed this, but I'm going to show it again. But right here, it kind of gives you all those things that Brian kind of talked about, how to put those all together. So right here, you had a strong buy. The long term is bullish. The strength of it is strong. Short term, you're in an upswing with consolidation. The range has been in a contraction and it's been weak. You do have a short term breakout. It's going to list your major and minor support levels. And it's also going to give you some suggested stops based on kind of the profit and target rules. So very, very well. This was something that was put together very well. And it's really captured the imagination of a lot of traders. Just really, I think it's something that has a lot of good stuff in there. So again, just to kind of recap what it covers, all of this can kind of be done with the indicator. The expert advisor kind of helps you organize it and put it together. You can scan for it. It does have a system test. We included tests so you can kind of test and see how well it works. But just this one indicator, it's going to help you understand the long-term and short-term trend strength, whether the range is expanding or contracting, where support and resistance levels are, overbought, oversold conditions. You can look for divergences with it, and you can see where the short-term breakouts are. So I kind of have like a little bit of a slide that kind of goes through everything Brian already covered. So I'm just going to kind of skip ahead a little bit, and we'll talk a little bit about how you can get this add-on. So let's go ahead and kind of just talk about it. Whoa, as part of it too, in addition, we did sit down, Jake and Brian I sat down and we did training in terms of how to Jake and Brian sat down and kind of talked a lot about how to do the JBXC, how to look at signals, how to understand signals, and all that kind of stuff. They did a great job. We sat down and recorded this. I believe it was back in May, if I remember right. And then I did a second part where I kind of step by step go through and show you how easy it is to run those scans, how to set up your charts, how to look at different days with commentary, how to filter down your list, just those things that I think are important if you're new and getting started with MetaStock. So those are included. They're available immediately as soon as you hit as soon as you place your order, they're available immediately as on the login site. And that's just included for free. We do offer this, normally the price of JBXC, been very, very popular. It's a $599 product. We do back it with a 30-day money-back guarantee, so you can try it. You can see if you like it. People have really, really liked this product as we have with all the good reviews from it. But what we're going to do today is if you want to try it out, we'll give it to you for $499, a $100 discount. That's a one-time cost. You don't have to pay for it over and over again. You buy it, you own it. It's a 30-day money-back guarantee, so your risk is here. Your risk-reward rate. Oh, actually, that was the backwards. Your risk-reward ratio is great because if you just try it and if you don't like it, you can always just kind of get a refund on it. We'll give you your money back. We will, if you haven't used MetaStock before, it's a great time to also try that. MetaStock, just to kind of give you a little blurb for that, we've been making software here. Yeah, well, not here in this office, but here in Salt Lake since 1980s. MetaStock's been rated the best software in its price category. It's been rated this year, what makes the 31st year in a row that it's been rated #1. So we'll give you, if you don't have that, MetaStock will give you a free trial to help you evaluate this. Again, that keeps your risk at here, not up here, very low. We'll let you try it, see how you like it. If it's helpful for you, you'll definitely want to keep it. So give us a call. You can order this online if you want to. metastock.com/JBXC. You can give us a call, 800-882-3040, or you can go to metastock.com/saleschat. If you want those trading rules, send me an email, jeffrey.gibby@metastock.com. A lot of people ask me about how to get those PowerPoints. I'll get them for you. Just send them over to me and I'll kind of get you those rules so you can get them. So jeffrey.gibby@metastock.com. Want to say thank you for everybody for coming. Give this a go. Again, if you don't like it, there's a refund that's available. My picture just got in the way of all the questions in YouTube, so I just want to make sure we don't have any. Sinky says thank you for the awesome presentation. And I do want to say thank you to Brian for all the work on this really, really creative add-on. Jake for everything over the years. I want to thank you. Thanks for coming. I hope this was helpful for you. I hope you learned something. I hope you liked and subscribed because that helps a lot, dude. If you have any questions, if you need anything, reach out to us. We're happy to hear from you. Thanks for being here. We'll see you again at the next one. And until then, have a good holiday weekend. Goodbye.
Hi, Kelly Clement here from MetaStock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.